In this video, I'll explain exactly how to know when you should buy a stock, right? Knowing when to buy a stock is fundamental to making money in the stock market. And what it really boils down to is understanding valuations, right? Understanding when to buy a stock is basically understanding valuations. And understanding valuations is so much more than looking at trailing P's and forward P's, price to book, a bunch of ratios. You don't want to be that guy that's like, oh, this stock is trading at 100 trailing PE, so it's overvalued and I'm not going to buy it, right? No, you don't want to be that guy because he's not going to make any money, okay? There's a lot more to look into than just these simple ratios that a lot of people go to. So like I said, knowing when to buy a stock really comes down to understanding valuation. So that's what we're going to talk about in this video. So everything in the stock market is risk to reward. And knowing when to buy a stock is knowing when you're getting a good value for your money, okay? For me, a good value is if I can 2x my money in the next 5 years. So how do you value a company? Well, in this video, we're going to do this together, and we're going to go over my most recent investment, which is actually one of my largest investments, as an example. And I'm going to talk about what I did and what I used to value the company. So the first step to understanding the valuation of a company and knowing when to buy a stock is knowing the business and understanding its growth, okay? So the company we're going to be talking about is Corsair. Now, what is their business? They sell PC components and accessories, right? So is the company growing, right? That's the next thing we need to understand. We know how they make their money, which is key and fundamental to understanding their valuation. But now we need to know how much are they growing? We need to know how much, is it accelerating? How long have they been growing? So we're going to look at revenue growth, net income growth, and if they're not profitable, right, is their net loss shrinking? Like, these are things you need to look at once you know a company's business model. So over the past couple years, Corsair's revenue growth has grown by 9.58% and 17% in 2018 and 2019 respectively. We can also see that they haven't been consistently profitable. So profits is something that's very important, but a lot of growing companies aren't always consistently profitable. But it is something to keep your eye on, right? If they are losing money, you want to see those net losses shrinking. So looking at Corsair's last quarter, we see they grew revenue by 60.7% and grew net income by 2,293%. Okay, now I want to just make a note that that net income isn't sustainable, right? They just had a great quarter. So mainly we want to focus on revenue growth. So we want to see, is the revenue growth accelerating, right? We see it is. We see they have inconsistent profits, but as of the last quarter, we see the company's moving in the right direction, okay? Basically, in the stock market, just for anyone new that's investing, the higher growth that you're getting, the higher the valuation is. So you're going to be paying more for the stock that you're buying, okay? So the next thing to understanding a company, right? We understand the business and how they make money, and then we understand their growth numbers. So now we need to look at their total addressable market. And the reason we need to look at that is because we need to know how much they already have, and we're looking for where their growth kind of caps out, right? What is their potential? Because they can't grow forever. So from Corsair's investor relations page, the company states, we believe our brand, market position, and operational excellence will allow us to continue to capture a growing share of the rapidly expanding gaming and streaming gear market, estimated at over $36 billion in 2019 by John Petty Research. So Corsair has updated their guidance in 2020, and Corsair projects its own revenue to be in the range of $1.651 billion to $1.666 billion. And if we do the math, we can see that they have about 4% of their total addressable market, right? So they have a small share of their market, but what we need to understand is how much of that total addressable market can Corsair actually obtain, right? And that's when it comes into the next step of understanding valuation is estimating market share, okay? So realistically, how much of their total addressable market can they capture? That's going to help us get a valuation on the company. So first, you need to know, does the company have a competitive moat? A competitive moat could be something like a product that's very hard to replicate and everybody loves, or a very strong brand. Looking at Corsair, we see for PC components, yes, Corsair does have a very strong brand, so yes, they do have a competitive moat. They also have a strong brand with PC accessories, but it's not as strong as their component side. So looking at their dominance, we see they're number one across the board for PC components in items like high performance memory, computer cases, power supply units, and cooling solutions. Corsair also has strong dominance in the PC accessory market, including items like keyboards, mice, and streaming gear. So how can we use this information to our advantage? So let's take a look at some dominant companies and their market share. Tesla, in the electrical vehicle market, they have an 18% market share, and that can still grow. Taking a look at Apple, at times they had a similar market share of 18%, but to my surprise, honestly, Samsung has an average of about 20% market share in the smartphone market every year. So taking a look at Coca-Cola, in the non-alcoholic beverage market, they have a 43% market share. So putting these numbers together, we can see at the higher end, we can estimate, right, a dominant, one of the most dominant companies in their industry can have roughly around a 20% or more market share. So let's use some of these numbers and apply it to Corsair. Let's say Corsair continues to develop over the next 5 years and gains up to a 10% market share. So using a total addressable market of 36 billion, now we're talking about revenue of 3.6 billion. And right now the company is valued at roughly 3.3 billion, okay? So if Corsair was doing 3.6 billion in revenue and they continue to maintain their price to sales of 2, we're talking about a company valued at 7.2 billion, which is more than a double up from their current valuation. So that is ideal to me. I like to see that. I like to see a double up over the next 5 years. Now that we understand TAM and their market share, what we really should take as next step into understanding the valuation of the company is understanding the industry and the growth of that industry. We want to look years ahead, right? We want to look to the future because we're long-term investors. And a 3 to 5 year prediction is much easier to make than a short-term prediction. So now we want to look at their industry and the growth. Now, looking at this quote, we see the global video game market size was valued at USD 151.06 billion in 2019 and is expected to grow at a compound annual growth rate of 12.9% from 2020 to 2027. This is according to grandviewresearch.com. So on top of a growing market share that we're estimating, the market in general is growing at double-digit rates for 7 years. That is a very long time to grow at double-digit rates. So all of this information we're gathering right now is helping us build an understanding of the company's valuation or future valuation that we're estimating. So now we can get into some of the metrics that people like to talk about, such as price to earnings and price of sales. So on Yahoo Finance, we see Corsair has a forward PE of about 29 and a price to sales ratio of about 2.27. So for a growth company, you can normally expect forward PEs of around 25 to 30 and price to sales around 5, right? But now let's compare these numbers to the competitor, okay? Because comparing to your competitor is a very important step in understanding the valuation of a company because they're in the same industry, so they're probably experiencing the same growth rates. So that's really the next step to understanding the valuation of a company and when to buy a stock is you want to check the valuation compared to their competitors. So in order to make sense of these numbers, we're going to compare Corsair's numbers to Logitech's. So we see Logitech has a forward PE of 22 and a price to sales of 4. So Corsair is trading at a cheaper price to revenue, but a more expensive projected price to earnings, right? We got to understand these forward PEs are analyst estimates, so they're not exactly 100%. Corsair could beat numbers and beat these estimates. So what we really need to look into, and which is the next step to knowing when to buy a stock and understanding a stock's valuation, is understanding the company's profitability and their moves forward with profitability. Are they getting more profitable, less profitable? What's their net income doing? So to understand a company's valuation, we need to understand their profitability. And to understand Corsair's profitability, we could take a look at where their revenue is coming from, right? Because revenue is top line. So we want to see how much of that top line is going to move to bottom line, which is net income. So as you can see, for Corsair's revenue growth, they're experiencing a far greater growth in the categories with higher gross margins, right? So a lot of Corsair's growth is coming from a more profitable category. I think Corsair's forward PE is high. Honestly, I don't think it should be at 30. And this is because Corsair's gross margins are growing. So what have we got from this? We now know a ton about the company, a ton about the industry, and a little bit about their valuation compared to competitors. So what we can do now with all this information is make some estimates, right? So if we take Corsair's last quarter earnings per share of 43 cents and expect Corsair to earn on average that over the next 4 quarters, which doesn't account for any company growth, doesn't account for any industry growth, right? Any of that. We're just saying everything stays relatively the same. We see that they're going to have a forward PE of 20, right? So that's a lot lower than 30. And I think that's completely reasonable because over the next quarter, we're having the holidays, which is going to be a lot of extra sales and a lot of extra profitability, right? And then over the next 2 quarters, we're not even going to account for the growth of the industry and the company and their market share. So we know last quarter, Corsair grew revenue at 60%. We know the gaming industry as a whole is supposed to grow at 12.9% over the next 7 years. We know Corsair is a super dominant brand. We know that companies with dominant brands normally have about 20% market share, but for Corsair, we're going to estimate 10% just to be on the safe side. And then we know that currently Corsair has only about 4% market share. So using all these numbers, I think it's fair to say that Corsair will grow its revenue by a minimum of 20% over the next 5 years. I believe that's fair, and that makes sense to me. So currently, Corsair's expected revenue for 2020, is supposed to be in the range of $1.651 billion to $1.666 million. Okay, so let's take their low estimate of $1.651 billion and compare and compound that by 20% over the next 5 years. Okay, that's going to give us net revenues of $4.1 billion. And assuming they have a price of sales of 2, we get a company valued at $8.2 billion in the next 5 years. So what is Corsair's current valuation? About $3.3 billion. That sounds like easy money to me. That's over a 2.5x on our money, okay? So in valuing this company, what do? We use data and facts to make assumptions and projections about Corsair's future valuation. Could we be wrong? Yes, but I think it's far more likely that we're right than wrong, right? So knowing when to buy a stock really comes down to understanding valuation. And what have we learned about valuation? We learned that we need to look at a company, their business model, and their growth. We need to understand the company's total addressable market, their market share, their industry as a whole. Then we want to compare their valuation to competitors. We need to understand the company's movements toward profitability, and then we need to make some estimates. And once we get there, then we can decide, right, is it time to buy the stock? And normally, for me, if the numbers come out so that it makes sense that the stock 2x's over the next 5 years, then yes, that is the time to buy the stock. If not, if a lot of that growth has already been priced in, which it has with a lot of stocks, and you'll see that if you do some of these estimates, then maybe the stock's not for me, right? So let's say you found a stock, you looked into their valuation all the way, and you say, okay, this stock makes sense. It's going to 2x over the next 5 years, or you believe it will. So what do you do next? Well, there's certain things you need to do when you're purchasing a stock. Well, first of all, don't be too picky, right? So if the stock is at $30-something, like, oh, I'm going to wait till it's 20, right? But if you already like the valuation of $30, it might never drop to 20, and you might completely miss your opportunity. So that's never a good idea to be too picky. If you like the valuation, you like it, start a position, right? And what I do and what everybody should do is always buy multiple times, right? If you buy one time your entire position at once, say, what are you going to do if the stock drops 15% tomorrow? Nothing. Like, you're screwed. You can't do anything. Now, if you start with 50% of your position, you can buy more as it drops, right? But say you buy 50% and the stock goes up, then you're in the green, right? You see, so it's a win-win if you buy in chunks. I normally buy about, say, 3 times is a decent amount. I'll start with maybe 50% of my position if I really like the valuation, and then I'll buy 2 more times of 25% and 25%, and then that'll be 100% of the money I'm willing to spend on that stock, all already invested. So let's say you did that, you liked the valuation, so you know when to buy it, you started your position, you got it filled out, you bought over time, right? So now what do? You need to stay up to date with the company, right? You need to listen to quarterly conference calls, stay up to date with 10Qs. You need to regularly check in with the valuation of that company, see if it gets out of control or if it's super cheap and you will buy some more, right? So, and what you should also be doing is seeing, is this company in line with your expectations, right? Are they following the estimates that you created? Does everything that's going on make sense? Because if you see it's starting to not play out as you expected, maybe you should pull your money out because your entire thesis for the company was wrong, right? So you just need to stay up to date with what's going on with the company. So the only times you should really sell a stock, once you have it invested, you have it bought, you have the position built, is if the business model changes, the stock becomes ridiculously overvalued, or you need cash because you have too much in stocks. So that is everything wrapped up. That's how you know exactly when to buy a stock. You need to look at their valuation and see if their valuation makes sense over the next 5 years. That's it for today's video. If you liked the video, please drop a like and comment and subscribe to the channel. I have like under 60 subscribers, so I'm trying to get to 100. If you have any video ideas, please let me know in the comments. I have no problem making them. I look for ideas all the time and I'll give the people what they want. And I just want to let you guys know Corsair is one of my largest positions and I plan on holding for the next 5 years. So with that being said, everybody have a great day.